સાથે અત્યારે એક્ઝામ ઓસ્ટ્રેલિયાના સીઈઓ પીટર મેકવાયર જોડાઈ રહ્યા છે. Peter, good morning. As far as we've seen in crude oil prices, have been soaring for the months, but now final blow come from US that sanction on Russian oil imports. What kind of situation you have seen in Brent crude market?
Well, good morning. A couple of things. First off, we've got 130, or it's $130 a barrel for Brent. We've got WTI sitting at 125, and we've got gold at $2,050. So there's a lot of risk premium built into price. And the actions by the US, I think, are only going to force more upside as far as price appreciation. And as many analysts are saying, is 150 to 180 achievable? Seeing we're sitting at 130, it could well be. So that's where a lot of deal tension needs to be appreciated in the market due to these geopolitical concerns.
Okay. So, which kind of impact that's showing on emerging markets? Because as far as no other countries are stronger as like US. So, which kind of effect it's shown on emerging markets and as well as European Union?
Well, any country that's got to be a net importer of crude oil is going to face great hardship from an economic standpoint, from an inflationary spike. The costs of food, the costs of all components of their economy will be increased, and that will be felt in the hip pocket of the consumer. And this is the great challenge that I think the world is facing at the moment, with very high inflation costs and the impact moving forward. How much further can crude oil appreciate in price over the next couple of months?
Okay. Due to these crude prices, as we see inflationary pressure, we can see on European Union as well as even US market. So, could we expect that Fed Fed rethinking about on interest rate rising? Do we think as far as this March policy, Fed will be decide to be roll out interest rate hike in next policy meeting?
Well, I think the great challenge to any central bank, and especially the Fed, considering that March was going to be lift-off for rate increases, is going to be the cost of inflation, the cost of energy, which is felt globally. And at $130 a barrel, the impact to the consumer is immense, and the inflationary situation creates a dilemma for any central bank, which is raising inflation or rising inflation, tackle it with higher interest rates, but you get into a point or a conundrum that you approach with weak growth, the potential for stagflation. And no central banker wants to press the go button today and then in 2 months' time having to wind it back. So that's the challenge that I think all central bankers are facing, and the appreciation as far as the US dollar has been enormous. We're now sitting at 99 for the US dollar index. So highly volatile times, highly unusual, and would be a very large headache for any central banker.
So, as far as this situation will be settled down, and we can expect after this situation de-escalate, we can see much more greater movement in financial and banking segment?
Yes, first off, the assumptions that you're saying as far as when we see it wind back or when we see this de-escalate, first off, I don't think we're even anywhere near the inflection point for that to happen. So that inflection point may be in a day, a week, or a month. It depends on Ukraine, it depends on certainly Mr. Putin, and it depends on many other moving parts into the whole equation and how that all wraps around and materializes. So until we get to that point, then we can take I think a sigh of relief that it starts to unwind. But we've got a fair bit to go yet until we appreciate that with President Biden's actions as far as importing of Russian crude, and who's going to fill the demand issues by taking Russian crude out of the market. That's the question.
Okay. And lastly, Peter, as far as we see now, Russian crude imports are banned, then OPEC countries are now driven in the pricing Brent price market. So, do we expect if as far as US policies, US will be interfere in OPEC meeting, and do we seen that US ask OPEC countries to raise their production?
Well, first off, I wouldn't be surprised because they've got to secure oil from somewhere. You've only got some of the big producers that can actually fill that criteria. One being, of course, Saudi Arabia. Secondly, possibly Venezuela and a couple of the others that fall into that opportunity to turn up their production. And that's the dilemma that the US will face as we roll into spring in the US and the traditional increase as far as summer driving season, which we know starts in around May. We're only the best part of 7 weeks from there, or 6.5 weeks. That's a very large dilemma for the US to face, with higher energy costs and the opportunity that you may not be able to secure enough oil for the domestic consumption of the United States.
Okay. Thank you very much, Peter, for joining us. And as far as the situation will be de-escalate, we come again to you and learning about the global markets and which sectors should be on the process. Thank you very much, Peter.
Thank you.